Hey there, how's it going? So right now we're going to go through how to find hidden levels of support and resistance. As price action traders, the most important metric on a chart, the most important consideration is going to be support and resistance. So these levels are crucial to your trading. And upon this trading lesson alone, I'm pretty sure that you'll be able to be consistently profitable. And I'm not exaggerating. What we're about to go through is something that could make you consistently profitable if you implement it in the correct way. And here we go. So we're going to be talking about price action trading and how to find these hidden levels of support and resistance. So price action is all about support and resistance, and I cannot stress that enough. So when you're trading price action, you're basically trading support and resistance. This is what you're doing, and this is what your business is all about, support and resistance. So what are these support and resistance zones? So on a chart, you have these price levels that tend to act as a barrier. So we have price, we have a level on a chart, and we have a barrier. So these barriers are what we call support and resistance. So when price goes to these levels on a chart, it means that it is reaching a boundary. So price has a choice. It could respect the boundary that was set before and reverse, or it could break it. But either way, whatever price does at this zone will tell you exactly what's going to happen. So these barriers are not to be feared, but these barriers are where every trader is going to find the best entries, the best exits, and the best price action setups. So these barriers can have three angles within this cycle. So we only have three angles that we're going to be dealing with, and we have the diagonal angle, the horizontal angle, and the vertical angle. All right, this is what we got. And these are all the angles that we have. So we're talking about price and how it moves. And if you join all of these angles, what you're going to see is that if you join them and you connect all of the edges, you have a circle, you have a wheel, you have a cycle. So price moves in cycles. So when it's moving in cycles, it's moving round and round. But like the spokes of a wheel, these angles are where price finds strength. Like the spokes of a wheel, those angles are where the wheel finds strength. So these angles are very important, and these are the only angles that we consider when we're trading. So we have the diagonal angle, which is like a trend line, and we have the horizontal angle. So most support and resistance is mentioned to being horizontal support and resistance, while the diagonal support and resistance is derivative of the horizontal support and resistance. But people hardly ever consider vertical areas of support and resistance, and this is what we're going to be going through, and this is why it's a hidden level. No one knows how to find these vertical levels, or no one actually uses them. So you can find just an easy way that you can use all of these in order to know the price cycle, the price trend, and how you can actually trade the market at any given point in time. So this is what we have when we look at a chart. We have here, we have the horizontal support and resistance, we have the diagonal support and resistance, and this is price just moving just as it does. And here price came, hit a double top, came lower, but didn't actually hold below the lows, and came busted this area, came back, retested it, and as you see, again and again, price will come back and retest these areas. But you're always going to be looking for these sneaky moves like this one right here, where price pretends to pass, pretends to break out, and actually fakes out. So this happens a lot, and within these areas, you're going to find that you have the horizontal areas aligned with the diagonal areas. So you have the support and resistance being in a trend, and you also have it being in a cycle. So this is how it happens on the chart, and this is a typical trading example. Random as it is, it's accurate as it stands in the market. So let's do this. how do you know which zones to focus on? This is a very important aspect. When you're focusing on your trades, you're probably on a certain time frame, and on your time frame, what you're considering is the risk reward ratio. So you can use this strategy, you can use this methodology, you can trade in a simple and easy way using resistance and support by um, by using the principle in any time frame. So you can use this in a 15-minute time frame, 1-minute time frame, monthly time frame, or whatever. It's really up to you. So the price zone to focus on depends on your trading. So in my trading, I focus on the longer time frames, 4 hour, sometimes on the 15-minute. So you can use them on any time frame. So support and resistance is based on the past. So you have to understand that the past action is showing what the future price action is likely to do. And this is how we actually trade. So in order to find these areas, we look at peaks, we look at bottoms. So price will peak and price will bottom. So this is a chart of oil. It's from 88 to 2005, and we can just see that price has been moving up, and then it started bouncing. So when we're looking at peaks and bottoms, basically we're looking at this. This would be a peak, and this would be a bottom. This is basically how we find support and resistance. So this would be on a really large time frame, and but that's how it works. You're looking for peaks, you're looking at bottoms. So when you're doing this, you're doing this based on price's reaction and action in the past. You're doing this based on what price has been doing before in the past, and this is how you want to model what you're going to actually do when it comes to taking action in any trade. The basis of support and resistance is in the past. So you look at what happened in the past 5 minutes, in the past 4 days, in the past 2 hours, what was the peak and what was the bottom. Okay, so typically we have these support and resistance levels looking something like this. So the areas could be perforated, but price returns to these zones from time to time. So when it comes back to this area, what you want to discover is the price going to actually break the zone? In this case, it didn't. It tried to break it 3 times. So you'd probably put a trend line here, and then when it breaks, you take the trade. Didn't go that low, so you're looking for it to clear the lows, and it didn't, so you're looking for it to break this again, which it did, retested it again, then it went up, came back to the same level again, went back up, you know. So this is actually a stock that was traded, a paycheck company that was traded, and that's how it reacted in these zones. So here we have another stock that's respecting the zone, the zones, and we're looking at a 15-minute chart in this case, and we see that we have this triple bottom where price came 3 times and didn't manage to break this, and started making higher highs, higher lows. So it started trending. So this started moving in a diagonal angle. So this actually is its own movement in a certain way according to support and resistance, diagonal support and resistance. So price would tend to be predictable. Okay, so price action trading is based on the present. Even though you're waiting to react to the market, you must be proactive and not reactive. Even though support and resistance is based on the past, you have to act in the present. So it is support and resistance is based on the past, but price action is based on the present. The present price action is the most important, not the past price action. The past support and resistance level is important in considering the present moment's price action. So trends are support and resistance. So when price moves in the same direction, it tends to trend. This is seen as levels of support and resistance. So trend is always your friend, and I have I believe that trading in a trend is the simplest and the easiest way that you could actually ever learn to trade, or that you could actually start trading today, because the price is always trending even though it's always ranging. So you have to look at what's actually happening on a chart. So this is an example of Oracle, and this is a one-day chart that's showing a trend that's been going on for years. So price will be moving in this certain rhythm for a long time, on a long time period. But depending on your time frame, you'll see that the price is trending or the price is consolidating at any given interval. But in this case, this price is moving in a price channel. So when we understand how to find these zones, we'll see where we can take trades and where price is likely to bounce. This is golden information when you want to enter a trade. So at times like these, you'll see that price will tend to have areas where it tries to do some funny shenanigans. So when price perforates a trend zone, perforates a price line, you still have to stick to the zones and see how they're respected. Is price holding below the zones? If it is, then follow the trend. Don't even question anything else. Don't think that, oh no, price is gonna fake me out. So here, you could have made some money on the drop, but who knows? All right. So this is another trend that I discovered on the S&P. This is on TradingView, and this is the S&P 500 monthly chart. So price is in a strong uptrend, but currently price it looks like it wants to come and retest the trend line. We'll see what happens there. So for more updates on my trading, you can just check out Nerdy007 on tradingview.com. So just check that out. So focus on long-term price action for optimum results. Trading with the big picture is far more profitable. This is why I would tend to look at a monthly chart, a weekly chart, or even a daily chart for entries. So if I'm trading intraday, I am definitely going to look at the weekly chart, even if I'm trading on a 15-minute chart, because I want to know if I can turn this position into a swing. I want to know if I should take positions early. I want to know if I'm trading counter trend. So support and resistance will tell me all of this information, because price will turn at these areas. All right. So when you're looking at a higher time frame, you can see more, you can do more. Like you're able to understand more of what could happen on the market, more of what could happen with the price, more of what could happen on a chart, because what you have is a higher perspective, a higher dimension. And once you're doing this, it means that you have to trade less, not more. When you're at a higher state, then you have to trade less, not more. But when you have a microscopic view, or when you take the microscopic trend, then you are gonna be inclined to trade more, because there are more opportunities, but the opportunities are minuscule. But here, when you have less trades, the trades tend to take a longer time to complete. So you might have a preference. But I do believe that the best way to handle that is to do both. But once you have a higher perspective, a longer term view, then you know with more conviction what will happen on a larger scale. And when you're right for a long time, in a lot of ways. But on a microscopic level, when you're wrong, you might be wrong continuously. So let's get to the nitty-gritties of this. So when we're talking about trading and support and resistance, we're going to be talking about candles. So here we have two different candlesticks here, and we have this pin bar, right? And then we have price changing momentum and changing direction according to the shape of this pin bar and the shape of this candlestick, which is bigger than this green one here. And the opposite thing is happening here, that we have the shape of this pin bar and the size of this candle showing us the direction of momentum. So it's very important for you to be able to read and understand candlesticks. This is very fundamental. If you do not understand how to read and understand candlesticks for price action trading, you won't be able to be profitable in a consistent way. Right here, what this candle would tell you, for example, is that price came down. It tried to go down, but it did not close at the lows. Instead, it closed higher than it actually traded within this time frame. So it means that price found a level of support here. And then furthermore, the size of this candle engulfing this previous candle, that was supposed to show us all of the bearish power, all of the strength, all of the might of the bears. That candle was eaten up by the bullish candle. So this means that there's a huge shift in momentum. So this was discovered in three ways. First of all, when you were watching this candle doing what it was doing, and when you saw it doing that, when you saw it being rejected, if you see it in real time, you actually see the effect. And you can usually anticipate when this happens based on how you understand candlesticks and all of that. So the opposite thing happened here on the bearish side. So this shows us where support and resistance previously happened. So when we see something that resembles this, when we see something resembling this, it doesn't have to be exactly what we're looking at the moment, but it just has to be something that has some semblance to what we're talking about. Then when we see that, we know that we have a level of support and resistance. That is very important. So this shows us. So this shows us as well as the actual zone. So when we're reading candles, we're looking at the open, high, low, and close, and it's basically like that. So we're looking at a zone and what happens to the candles. So we could say that price finds supply at that zone, and then it finds demand at the level of support. But more on supply and demand later, because this is an art form on its own. Supply and demand trading. It's very similar to support and resistance, but not quite the same. All right. So a lot of wicks are a possible reversal. So the wicks are those tails that we're talking about. And if you enter a trade at this point where you have those tails, you have to put a stop loss on top of the tail. All right. So let's just take a look at what we're talking about here. So, for example, you've seen that price came down here, found a level of support, and as we're looking at this, we're looking at the Euro Pound daily chart. Okay. So price will come here, and then it'll find a level of support, test this area a couple of times. It came back and tested this area again. And perhaps you weren't in this trade for whatever reason, but you notice that this is where price action took place in the past, okay? And then you're like, all right, that's cool. And then you come back and then you see this little candle that looks like a cross. You're like, oh, okay, what's that doing there? And when you see that, so what you're actually looking at there, oh yeah, right here, is that what you're looking at right there is an area where price is finding support, and it came and tried to break this level. All right. So when you're placing your stop, you're going to place it below this wick here, because if price comes here and starts trading below, then you're in trouble. But price could do anything, that it could come and even stop you out and then go back up. So you also have to be prepared for that. You have to be prepared for anything that could happen actually. But this is just a simple example of what could happen or what could turn out to be a good trade. All right. So that's one example. So this is something that I've been looking at. Let me just show you a couple of my charts here. This is something I've been looking at. This is the euro dollar 4-hour chart. This is what's currently happening. And here we have these tops. Okay, so you see the top is followed by this drop that comes and attempts to go back to this area, but to no avail, because it shows us these wicks, which shows weakness, and then the price breaks this trend line. Let me just draw it in for you so that it's more visual, it's more visually articulated, right? All right. So price breaks this trend line. All right. This made some pretty cool trades, and then like it just crashed down, but it came back to this previous level, and price started back up again at a diagonal point of support and resistance. So this is on the euro. So what I want to point out is the fact that price will always come back and respect all of these zones, whether they are diagonal, horizontal, or vertical. Okay, so we can also see that when price came back here, let's see, is this straight? Yeah. So when price came back to the same level that it broke here, came back and tested it, and then it crashed back down again. So this is what price does over and over again. Forms this pattern and then crashes. Then comes and tries to retest it. You see that it came back when it tried to retest the bottom of this price structure. So this is what we'll always see over and over again. So this is just that's the euro 4-hour chart. All right. So let's see what this is the New Zealand dollar daily chart. But in this case, we can see that we have something that looks like a trend. This is an uptrend, and it keeps on going in the upward direction. All right. So we have a trend, and when it's this steep, it means that it could be close to being broken. So when it's this steep, I'm probably looking to find a place to short. All right. So you could find some shorts there, or you could just see what happens at the previous levels of support and resistance, because it could keep on going up based on the fundamental data. So this is something that you should be looking at. So you're looking at the bottoms and you're looking at the top. So let's go to another one. This is a dollar yen daily chart, and it's been finding support at the moving average. So this is very, very, very common that price will come back. You see, it came here, came here, came here, and then it will show you a Pinocchio nose and go in the opposite direction. So it's just lying to people and then taking their money. But when you know that Pinocchio's nose grows whenever he lies, then you know where the dough's flowing, right? So you follow that direction. So when you know the candlestick patterns, then you'll be able to interpret exactly what's happening. So you don't need to know that, oh, no, this candlestick is a shooting star or whatever. No, you just need to know that, all right, this is showing me a tail, that people tried to take the price higher, but they weren't able to take the price higher. So in any time frame, you can trade. So you should be able to trade on a chart just like that. Just place your order just like that, okay? Just as you can see, a naked chart, okay? So now we're going to go through some tools to help you find these levels of support and resistance, all right? So the first one are pivots, all right? So when you want to find these levels of support and resistance, you can do it by the eye, but you can also use certain tools. One of these tools is a pivot point. So pivots are areas that show significant high, low, and closing prices. So when price is trading above the pivot, this is usually a bullish sign. When it's trading below the pivot, it is usually seen as a bearish sign. So the pivots just show you the average prices, okay? So they show you the high, the low, and the close as the averages of the day, okay? So this is the central pivot, and this is how they find it. So when the price starts trading, you're looking to see what it does at these levels, at these pivot points, to see if it actually does turn, if it actually does something of interest, if it shows you some action. All right, so these are the calculations of finding the pivots. If you'd wanna calculate them on your own, you could do that, and that could be of some help. So when you do this, then you'll be able to know some areas, some mathematical areas where price is able to bend or break. So these are actually asymmetrical zones. These are zones that are formed by price action. These zones are formed by where price has been and what the investor sentiment is. All right. So this represents some highest levels of support and resistance zones. All right, so another tool is a median line. I really like the median line, and I know that it really helps to spot a trend or an area of support and resistance very fast. It does it really fast. So I think this is one of the more proactive tools that you could actually learn to use, the median line. It really shows you things quickly. All right, so when we're talking about the median line, we're talking a little bit about harmonics. So, so a harmonic is a place of balance. Okay, so when we say median, we're actually talking about the middle. So it means that we're talking about it means that we are talking about a zone where we are at equilibrium. So we're looking at the average price. So price tends to move in the same pattern. So it tends to average the same things. So price would generally come back to the middle of the high and the low in relation to price action. So a median line is a relationship between three alternating points. All right. So these 3 points are alternating, and this is where we find the median line. So we have A, B, and C, and the median line is in the middle. So we have an upper median line and a lower median line, and then we have the median line. So you're looking at all 3 of these angles. All 3 of these angles should show you some piece of information. So it would be good if you have a median line corresponding with the level of support and resistance, or a median line corresponding with another zone, all right, that you've noticed on a pivot point or using another tool, all right? So the median line will show you the middle of the 3 zones and where price is likely to zigzag. So price is harmonically attracted to moving in a rhythm that tends to come to the average or tends to come to the middle. So this median line is actually very closely related to the ratio of phi, where you have the circle. All right. So another example of a median line. We actually were looking at this zone. We're looking at the euro. This is the euro again. And the previous time we're looking at the 4-hour chart. Now this is the daily chart. So we have a median line here. This is the middle zone. So here in this particular chart, I could have used this zone, or I could have used that one. But this one was not really working out because if you connect this line and that line, you get that line. So I just used this zone, and it qualifies as a median line. So we have this zone, the high and the low. and this is the middle line. So what do you see? What happened on this chart when you drew the high and the low? You drew the high and the low. The next thing you saw was price shooting up, coming back down, and then bouncing right here at the middle, coming right here to the middle, and now it's forming a triangle right here at the middle. So this middle line is very gravitational. And as you know, when price starts to consolidate, like it is doing right here, it means that it's going to have an explosive movement in either direction. So this is what the median line shows you. It shows you that price is moving or price is not moving. And here we can see that this wick is showing that there was a huge rejection. So probably price is going to continue in the direction of the trend, which is the downtrend, but we'll just see what happens at these median line zones because they're acting as support and resistance. So we'd also want to see them corresponding with some areas of yeah, okay, we're back. All right, we wanna see it corresponding with some areas of support and resistance that we actually observe, so that it makes more sense for us to place a trade at a particular zone. All right, so here we have that median zone, and we have the high, we have the low, and we have the price approaching this area and showing us that huge wick, that huge Pinocchio-nosed wick. So we'll know exactly what to do according to the price action that we see on the chart. So this is a cool way to see it. So we're taking a closer look at the same thing. So you see that price came here to these zones continuously, just bouncing, just bouncing, just bouncing. Come on, just bouncing. It wants to come and bounce here again. So you'll be looking at this as a zone. So this is why you'd want to trade this looking at the multiple time frames, so that you can see what exactly is happening at the zone. So that's the 4-hour chart. So that shows you a clearer picture of what's happening. But the same thing on a 1-hour chart looks like this. This is the same thing on the 1-hour chart. You see that these levels are diagonal, but they're almost horizontal. That's the middle. And price keeps on respecting these zones. How can you tell? You can tell by the wicks of the candles. You can tell by the way that they're breaking these zones. When you see a candle that's this huge red pole here, when there's that much velocity, it means that it's using all of that energy to break a zone. So this is why price got tired over here. But since it already broke the zone, we're looking for it to hold below this huge candle. So this is what we're looking at when we're talking about price action. So this is the median line, and you can also see that this is also moving according to the moving average as well. So you'd be looking at all of these areas of confluence. So generally, when you see that the moving average is like almost horizontal, it means that the market is ranging. So it's not trending. So you wanna move away from that, or move away from that time frame, and find a better trade, because you don't want to trade a ranging market because it would be too choppy. When you do that, then you're just going to be scalping. So you could very well find some happiness doing that. Yeah, there are no hard and fast rules. So yeah, it's all fair, I guess. So if you do that, then if you're gonna scalp a range like this, you're probably gonna go to a 15 or 5-minute chart for some really good areas of risk-reward ratio. All right, so this is Facebook, and here we're also looking at how it respected all of these median lines, point 1, 2, and 3 showing us the high and the low, and then the pitchfork goes on into the future, and you see that when it finally broke down, it did that at that median zone. So the median line tells you with super quick accuracy where price action is likely to be. All right, so now the other tool, the third and final tool that we're actually going to go through is the Fibonacci tool. The Fibonacci tool. So this is an interesting one. So this tool shows you the place that price will bounce and the basis of the golden ratio of 61.8. So this is the golden ratio. This is 61.8, and this pattern, this design, it's showing how it actually just forms, like flowers within flowers or galaxies and stuff like that. This is how it actually forms. This is the ratio of, this is the golden ratio, and this is the spiral of price, the cycle of time. This is what we're talking about, and this is actually life. So when the Fibonacci tool is a tool that you have to understand and start using. The Fibonacci is a way of knowing where price is going to bounce. All right, so let's just go through this. All right, so when price is moving, it moves in two ways. Okay, it's going to move in two ways. It's going to move up or it's going to move down. There's nothing else it can do, right? What else can it do? It can move up and down. Yeah, it can range for a few minutes. It can range for a day or two. It can even range for years. But eventually, it has to go up or down. And the longer it consolidates, the more velocity when it breaks. So it's like a dam that's accumulating a lot of water when it's just accumulating or consolidating. Okay, so when it breaks, when the dam bursts, wow, that's gonna be like that's gonna be a hurricane. So you have to be prepared for that. So price moves in two ways. Price will expand and contract. It'll get high and it'll get low. It'll move in impulse or corrective waves. All right, this is what price can do, nothing else. So this is an example of the Fibonacci tool. So what we have is that we've taken this tool. This is the bottom, this is the top. So price came from this area, gapped, and went to this zone. Then it came back to this zone, and then bounced back. So here, when price showed us this high, we just slapped the Fibonacci tool on the chart. And then we see that, all right, price came back to the 38.2 zone, okay? Came back, put it here, and then price came back here. But then even before all of that happened, price came back to the same golden ratio. This is the 61.8 zone that it came back here. And then it bounced, broke the high, retested the high, retested it again in a trend line, and went to the extension of the Fibonacci. This is what happened on the euro dollar chart, and this actually happened as I was trading it. So find a swing high and find a swing low to use the tool. All right. So the sweet spot that you wanna observe the Fibonacci at is the 50 to the 61.8% area. When you're looking at this zone and you look at those areas on a chart, you're going to see that price will tend to bounce a lot in these areas. So this tool shows you horizontal support and resistance. Okay, so this is that about the Fibonacci. And another Fibonacci extension is the one that helps us to find the vertical support and resistance. And it works like this. So this is the Fibonacci time zone. So you find a low, okay? And then you find a high, or you can find two lows or two highs. So you can find a place where you've seen price action. You've seen that price bounced at this zone twice, or you've seen that, all right, this is a high and this is a low. So you just stretch this tool. And what you can discover is that when price comes to these vertical levels, price will tend to do something. So here you'd be watching this candle. Here, this zone, you'd be watching this candle. So when you saw that price was moving extraordinarily fast at this area, you'd want to see that it actually holds at the height of this zone. If price makes a huge candle like that, it shouldn't be bossed around by smaller candles. When that's exactly what happened. So this would have told you this was the zone to take the trade at. Okay, so this will also tell you where the price might be exhausted. And here you see that at this zone, price comes back to the level of support and resistance, and then comes below the moving average. So we'll see if it actually breaks the moving average, breaks the median at this level. So you see this is an area of interest. And we're always looking at these as zones. So we're not looking to say that, oh, exactly at this line. No, we're saying that in the area of this line. So here in the area of this line, we see that we have some interesting price action going on with some wicks that are being sinister, actually lying to people, taking people's money. That's what's happening at those zones. All right. So, so you can choose price zones by connecting two price peaks, and this works for two lows or highs, or high, low, or high. So you can choose to connect two lows, or you can choose to connect a low and a high, or a high and a low. But you have to connect two price action zones so that you can find the vertical areas of support and resistance, and possible areas of reversal, or just interesting price action. Let's look at another one here. So we have a low, we have a high, then we have a candle. We have this huge candle showing that there's a continuation at this zone and actually breaks our level of support. But it actually doesn't hold below. So when it comes back up, it breaks the level that it broke previously on the vertical line on the next vertical line. It breaks it on the same candle on the vertical line by the candle. Breaks it, and then it continues with another candle there at the line that it is extending to. So you see how these lines really actually show you areas of interest and price action. That why is it that these candles are showing momentum, are showing price action, are breaking support, are breaking resistance, are retesting resistance at these areas? You see, when this zone occurred, you see that there was a retest at this zone to this line, and price went back up. And this is also still in an uptrend. So this zone would be very interesting to trade because let me just illustrate that this zone would be very, very interesting to trade because you also have this area here. You see, so you also have this area here, this area here, this area here, this area here, this area here. So this is support and resistance. It's a cycle. It keeps on recurring. So if you're doing this with the horizontal, you're doing this with the vertical, you're doing this with all of these trend lines, you'll see that you have quite the advantage over the average trader. You won't be able to trade like an average trader. You won't be able to lose in your trades because you know exactly what is about to happen. You know exactly where price is going to turn. Okay? So this is how you'd actually see it. You see this wick here? You see this? You see that? So all of these areas are telling you so much information. So much information. And you just have to be aware of what's happening at these zones, and you have to keep on refining your entries and your exits. So all of these tools give you an idea of how to find support and resistance, and the more you do it, the better you will get. This is guaranteed. So in this lesson, we've gone through some important bits of information, and if you're interested in learning more, just send me an email, and you can get a copy of the best trading book in the world. So here we just went through support and resistance, and in the book I do get into some more detail, but I was very, very serious that on the strength of this lesson alone, all of the things that we went through in this lesson, on the strength of what we're talking about, you are able to start making money. You are able to actually make money trading with what we've been talking about. So it's now up to you to do your homework, to do your research, and to start implementing the knowledge that you've just acquired. So all the best in your trading. See you next time.